You've got three auto quotes sitting in front of you, the same car, the same driver, the same address, and the prices are hundreds of dollars apart. So you do the obvious thing, you circle the cheapest one, and you move on with your day. And here's the problem with that. The quotes in front of you are almost never the exact same coverage, and you can find out you bought the worst option when it's already too late after a crash when the numbers actually matter. So today, I'll show you how to compare auto quotes the way someone who reads these for a living does. Not by the bottom line price, but by the handful of lines that decide whether the policy actually protects you. If you don't know who I am, my name's Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. I'll use one driver to walk through this. Call her Maria. She's shopping her auto insurance for the first time in years. She's got three quotes, and once you put them all on the same policy term, because one carrier might quote 6 months and another 12, the spread between the cheapest and the most expensive is about $600. That gap feels like real money. By the end of this, you'll see why it usually isn't and exactly where to look to tell the difference. The first place two auto quotes quietly differ is liability limits, and this is the single biggest one. Liability is the part of your policy that pays for the damage you cause other people, their injuries, their car, their stuff, when you're at fault. You'll see it written as three numbers, something like 25, 50, 20. The first number is bodily injury per person in thousands. The second is bodily injury for everyone hurt in the accident. And the third one is property damage. So 25, 50, 20 means 25,000 per person, 50,000 total, 20,000 for property. And each of those limits applies on its own, not as one combined pot of money. Here's why that matters when you're comparing. A cheap quote often hits its price by sitting at the state minimum. Maria's cheapest quote was at the minimum. Her most expensive quote carried 100, 300, 100. The same car and the same driver, but the price gap was mostly that one line. Now picture an at-fault crash. Maria pulls out, hits a newer SUV with two people in it. One person has $60,000 in injury costs, the other has $20,000, and the SUV itself is $40,000 of damage. On the 100, 300, 100 policy, all three amounts fall within the available liability limits. On the state minimum policy, the first person's injury claim exceeds the per person limit, and the damage to the SUV exceeds the property damage limit. The carrier pays only up to the limits Maria bought, and the rest can come after her personally. Her wages, her savings, whatever she's built. That's the real danger with state minimums. They look cheap, but all you've really done is assume the rest of the risk. The cheap policy didn't save her $600, it traded $600 in premium for many thousands in personal exposure. When you compare quotes, line the liability limits up side by side first. If one quote is cheaper because it's carrying lower limits, you're not comparing two prices for the same thing. You're comparing two different amounts of protection. And how much you should carry depends on how much you have to protect. Your income, your savings, your home, your future earnings. Someone with very little financial exposure is in a different spot than someone with a house, real assets, or young drivers in the household. For a homeowner especially, I generally recommend at least $250, $500 on the auto. You've got more to lose, and that also happens to be a common underlying limit a personal umbrella wants underneath it, though that varies by carrier. And in my opinion, if you own a home, an umbrella deserves a serious look. Uninsured and underinsured motorist coverage is the line most people skip right past on a quote, and it's one of the most important. It's the coverage that protects you when the other driver is at fault and has no insurance or nowhere near enough of it. We've covered the mechanics of this in detail in another video on the channel, so I'll keep it focused here on what to look for when you're comparing. First is the coverage even on the quote at all, and at what level, because in some states it can be reduced or rejected, and a cheap quote may have done exactly that. Second, what are the limits? Because uninsured motorist limits and your liability limits don't have to match. Think about what this coverage actually does. Someone runs a red light, hits you, and they're driving with no insurance or nowhere near enough of it. Your injuries are real either way, and uninsured and underinsured motorist bodily injury coverage can step in for your covered injuries when the at-fault driver's insurance can't. Damage to your car is a separate question depending on the state and the policy, which can run through your collision coverage or a separate uninsured motorist property damage coverage. So when you're comparing, Check that uninsured and underinsured motorist is present on every quote and check the limits on each. While you're in this part of the quote, look at medical payments or personal injury protection too. That's first-party coverage that can help with medical costs for you and your passengers, no matter who is at fault. The name of the rules vary by state, and Utah runs on personal injury protection, but the comparison point is the same. One quote might include it, another might carry a different limit, another might not show it at all. A quote that's cheaper because it quietly thinned out any of this isn't the better deal. It just moved the risk onto you where you don't see it until you need it. Comprehensive and collision are the two coverages that pay to fix or replace your own car, and this is where deductibles hide a lot of the price difference between quotes. Liability pays for the other guy. Comp and collision pay for you. Collision covers your car in a crash, you hit something, or someone hits you. Comprehensive covers the other stuff: theft, hail, fire, flood, a rock through your windshield, hitting an animal. Most quotes list them as two separate lines, each with its own deductible, and they don't have to match. I'm often a bigger fan of a higher deductible on collision than comprehensive because raising the comprehensive deductible tends to save less premium, and a comp claim usually doesn't sting your rate the way an at-fault collision claim can. But the savings vary by carrier, so look at the actual numbers instead of assuming both deductibles should be the same. The deductible is the part you pay before the coverage kicks in. And the thing to understand when you're comparing quotes is that the deductible is a dial you control, not a trick. A quote can be cheaper simply because the deductible is set higher. $2,500 instead of $500. That's not a worse policy, it's a different choice about how much of the small stuff you're handling yourself. Here's how I think about it and how I tell anyone in my family to think about it. Insurance exists to take the big risk off your shoulders. The risk you genuinely could not absorb on your own. The small risk you're better off keeping. So the question isn't what's the lowest deductible I can get, it's what's the highest deductible I can comfortably afford if I had to write that check tomorrow. Some carriers still offer $250 or $500 deductibles, and $1,000 is a common baseline, but if you can comfortably cover $2,500 or more, going that direction lowers your premium and leaves you on the hook only for money you could already handle. The part that would actually hurt, the total car, the catastrophic repair, sits with the carrier, which is exactly what it's there for. I spent years in the collision repair business before this, with adjusters in my shop every single day, and the people who do this well aren't the ones with the rock bottom deductible. They take the deductible they can afford without flinching and put the savings toward higher limits where it counts, including getting their auto liability up to a level where an umbrella can sit underneath it. So when you compare quotes, don't reward the lowest deductible automatically. Pick deductibles you can comfortably cover, set them at the same levels across all three quotes, and see which carrier gives you the best price and coverage there. One more thing to check on this part of the quote. Make sure comp and collision are actually on there at all. On an older car, people sometimes drop them, which can be a reasonable choice, but you want to be the one making that decision, not discovering that a quote made it for you. And don't forget the bottom of the page. That's where rental reimbursement, roadside, gap coverage, and new car replacement live. Rental can vary by daily and total limits. Gap can help with a loan or a lease balance when a total car is worth less than you owe. New car replacement is different. On an eligible new car, it can base the settlement on replacing the vehicle with a new one instead of only paying its depreciated value. One quote can carry these and another can leave them off. So make sure the small lines match before you ever look at the price. The thing no quote shows you is the most important thing of all: how the company behind it actually handles a claim. Two policies can read identically on paper and behave completely differently the day you file. The price doesn't tell you how long the company takes to pay, whether they fight legitimate claims, or whether you can get a human on the phone when you're standing in a parking lot with a red car. This is the part I feel strongest about, and it comes straight from the repair side of my career. I had adjusters from a lot of different carriers in my shop day after day on the same kinds of claims. And the same damage, the same repair got handled differently depending on whose name was on the policy. One carrier approved the right parts and the right repair without a fight. Another nickel and dimed every line and dragged it out for weeks. The same accident, very different experience for the person who owned the car, and that's the part the cheapest quote never mentions. This is genuinely where an independent agent earns their place. We've got access to lots of claim experiences across our whole book, not one isolated policy, but hundreds and hundreds of renewals every month. So when we point you toward one carrier over another, it's not about who's a couple $100 cheaper this term. It's really about who's going to be there in the way you need it on the day you actually use the thing. So here's how you actually compare auto quotes without getting burned. You don't start at the bottom line price. You start by lining up the major coverages and limits as closely as you can across the quotes. When you do that, you're comparing the same kind of policy. Then you match the liability limits. Confirm uninsured and underinsured motorist is on every quote and check its limits. Check medical payments or personal injury protection. Set your comp and collision deductibles where you want them and hold those same numbers across all the quotes. So you're comparing apples to apples. Check the bottom of the page for rental, roadside, gap, and new car replacement. And then and only then look at the price, because now the price actually means something. Now you know what each number is buying. When you do it that way, the cheapest quote is sometimes still the right answer, and that's fine. The point was never to talk you into spending more. The point is to make sure that when you pick the cheap one, you're picking it on purpose with your eyes open instead of finding out after a crash that cheap meant thin. If you want a hand doing exactly this, that's what we're here for. We'll put your coverage side by side, show you where the quotes really differ, and help you land on a policy that fits, not just the one with the smallest number on the bottom. The quote link is below if you want us to take a look. We're an independent insurance agency based here in Nevada, and we help drivers in Arizona, Utah, and California too. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and even business owners who want to understand their insurance before they need it, not after. Thanks for watching.